So sterling has been on a roller coaster ride amongst all this talk about the Brexit ahead of the referendum on June the 23rd. Well, joining us to look at how to trade sterling against a basket of currencies is Ian Coleman from PIA. Thanks for coming in. First one you've chosen, though, is sterling against the yen. Well,
we're actually looking at all the sterling crosses today, but sterling yen's quite significant. In technical analysis, we have something called an Elliott Wave formation. It's a bearish formation, or in this case, it's a bearish formation of 5 waves. And when we get to the 5th wave, which is normally a 261.8% extension of the first wave, it normally highlights that we're exhausted, oversold, and we're at least going to see a correction higher. And that's what's happened in sterling yen. We've hit this quite significant 155.52. 261.8% extension, and this isn't just a daily chart, this is a weekly chart that we're talking about. So a retracement could be seen of 38.2, maybe 50%, and these are big numbers.
So for you, what levels are then to watch for going forward for the pound against the yen?
Well, we'd look for initially the 50% retracement level. So that's going to be, just like a look at my, it'll be around about 175. To the upside.
Okay, that's the level we saw back at the beginning of February.
Indeed, and we're looking now around, we're trading around about 155 the figure.
Okay, as you said, we're going to look at a number of different crosses. So let's move over now to what a pound against,
sterling dollar.
Yeah, fine. So what should we be looking for there?
Again, it's a Fibonacci extension or exhaustion level, 261.8%. This is actually off a daily chart, so it's not pushed quite as far. However, when we think about the last general election, when we talk about the Scottish referendum, sterling at that time, or in those 2 periods, sold off between 3 and 4%. We've seen that happen again in the worry about Brexit, but we've now looked like we're overextending. And like I said, if you look to the daily chart, we've got a 261.8% extension. That's at 138.39. We've seen a recovery this week. Okay, it's only 2 days in, but on the 6-hour chart, we've also seen quite a decent reversal candle, and it's called a bullish outside candle. So we've seen a bullish outside candle. We've also seen what we call a Demark flip. It's Demark calls it a TD1. And it's
you're getting very technical on me, Ian. Here.
That's what we predominantly are, technical analysts. We obviously do have a fundamental swing to our analysis, but it is 70 to 80% technical.
But for those who are like the technical, like the charts, but aren't into the Demark and all the different kind of candle formations, I mean, how difficult then is it to trade these, or do you need to have that in-depth knowledge?
I think you do, and hopefully that's what we provide through Signal Centre.
Okay, so that's a pound against the dollar. This is a cable for you you're looking at. Yep. What is the cross that most excites you at the moment with sterling, do you feel?
Well, both of those crosses, we feel are strongly bullish now. Sterling Swiss has also seen a bounce higher from a 50% pullback level, and that's looking quite bullish. The only sterling cross that we're slightly wary about is euro sterling. That saw an aggressive bounce off what looked like a head and shoulders formation on the daily chart. It broke the neckline, it's moved higher, and we have seen a pause, a slight pullback from a 161.8% extension, and also a swing low, which I think was from March, not quite sure, of last year. So there is resistance there, but euro is looking stronger really than sterling at the moment. So that's sort of putting a little bit of a spanner in the works, if you like, with regards to strong euro strength across the board.
I mean, you're a technical analyst, so you're looking at the technicals, but when things like Brexit are moving these currencies so much, how can that play into your strategy?
It is difficult. We have to stick to our bespoke system. We've got some technical indicators that we overlay on our charts. Sometimes we miss trades. Sometimes it's very frustrating to see to be a seller of, say, cable over the last 2 weeks and not get your intraday entry level because the market is just aggressively pushing it lower. But we have indicators on our charts that show us not only where it's oversold, but where we should get corrections from. So we look for those indicators, and then we look to sell into the corrections to try and move with the trend lower. We are predominantly trend following analysts, if you like.
Do you have to try and then, so I suppose, block out the noise that many people would call it?
Yeah, we always look at the big picture. We sometimes do what we call time frame breakdowns. So we'll even look at a monthly chart, weekly chart, daily chart, and there are predominant formations, if you like. We then go down into very shorter time frames and try and get decent entry levels to take these currency pairs lower or higher.
Okay, thanks very much. Ian Coleman, he's keeping a close eye on the number of different crosses against the pound ahead of the Brexit referendum.